Hello traders, in this video we are going to learn about supply and demand. Demand and supply will play a good role in the market structure. If you see a structure, if you start marking your structure from the low to the highs, validating each and every candlesticks, you will get your demand and supply zones from where we can do the trade. For example, in this structure, if you see there is a low point here, I'll try to keep a trend line here like this. This is my low. After that I will try to look after this. Where is my high to confirm what it should form after it forming a bullish candle. The next candle to it should close the candle below the low of the bullish candle. So if you see that evidence, then high is confirmed. For example, if you see here, high is shifted here on this green candle, and then after this green candle has shifted its high here. So I taught you already what is the open high low close of the candles. So clearly use the open high low close. Whenever you place your cursor on the top, you can see open high low close, OHLC in the green. Okay, so this candle below, there is no candle closing. After that there is a candle closing above this candle here. So after this candle, what happened? The low of the green color candle has been taken by this bearish candle. So for me, this high is confirmed here. So I will mark my high here, and then the low is confirmed here. Low, when it confirms the previous bearish candle which kept the low. Okay, if there is no body closing below this wick, we will not consider any wick as a low. Okay, this is the rule. So this is our low. After this one has broken this low. Okay, this low, why we will call it as a low? When the previous bearish candle high will be taken by a green candle, this low is confirmed. Okay, so now we will see what is demand and supply in this market structure. If you keep mapping like this, at one point if you see, this will give us an entry. For example, I mark my low here. I didn't get a chance to take entry anywhere here in this demand zone. Demand zone is nothing but in bullish market, the red color candle, or we will call sometimes order block as well, but it is a demand, okay, which creates the price to go higher. This high, the above this candle, there is a high, right? Let me tell you very simply by drawing a box. The high of the candle, the low of the candle, I'll take like this and I'll draw it as a demand zone. Okay, let me reduce the opacity. So this is my demand zone. Previously my demand is here, now my demand is here. Why? Because this demand broken the previous high, okay, and created a new high. So this, when it is creating a high, you can see here the high is kept here. Before that there was no high. Okay, there is a small movement to the upside, but you can see that only one thing, this demand has broken this high. So the demand, what we will call here, is the zone of this red candle fully. If you mark, it will create as a demand. So we will be looking for the retracement to come into our zone and give us an entry, then we will take the trade. So this was our high. So simply like this, if you mark, you will get your demand. Sometimes it will play here or here sometimes. Okay, but most of the time the demand will be keep shifting. When the demand will be broke, demand means nothing but a higher low. Okay, the when a higher low forms, the last bearish candle which created a low, that candle high, until that will mark as a zone, that is called a demand zone. Okay, so if you see, this has retested this zone and formed a it created a low here. Low, when we will say, in the last bearish candle, high will be taken by a bullish candle. Here the high was taken here. Okay, so after that it has broken to the upside. So simply in bullish market, this is how it plays. Let me show you for the bearishness as well. So for this you need to know the basic thing, what is high, low. If this one thing you know, you can play the market. Okay, okay, let me start my structure from here. There was an high here. This is a high. After that this low was broken. There is an higher low here. This was the low. Whenever you get confused where to keep your low, always look into the candlesticks. Okay, the candlestick body closing is important. How many wicks ever it goes, it doesn't shift this low until it breaks below. Okay, so basically trend within a trend will be there. Okay, this is a structure to the upside which is shifting here. While shifting, what it has done, it has created a low and then a lower high and then a lower low, lower high. Like this, it will be keep creating the structure. So we should wait until the trend gets established to play with the supply and demand. Okay. So here simply there was a high, a low. Now we should see this low should not break this high. It didn't break. It broken to the downside a bit and then it retraced back. So simply this is nothing but a small 1 2 3 move. Okay, I'll mark my high here because above that there is no body closing of any candle. If you see this and you will mark it as a change of character, you will get always wrong. Okay, always a retracement trade. See, this is an bullish market. There was a retracement incoming. Whenever a trend retraces, it should form something like to confuse you. Okay, either it might come and retrace and go upside or break to the downside. To do any structure, it should do the demand and supply play. Okay, let's see how it is, what it is doing here. There is an internal 1 2 3 forming here. Further it has broken to the downside. How do you trade this? Okay, your low is here, low is here, low is here. My low came here. Okay, this is my low, and then what I have before this, I have a higher low. Simply you can't go and keep on this red color candle as your high. Okay, there should be a proper price action, right? So whenever a bullish candle is closing to the upside, the next candle, what it should do means it should give its body closing above this green color candle. Okay, here something weird it is happened. Usually green color candle closing will be the above, red color candle closing will be below. Okay, red color candle, where it closed here, but where is the open of this red color candle here? Okay, means here something happened. This is called, this very rarely happens, means sometimes it happens. Here whatever the price action is happened, according to me it's illegal. I'll tell you why. See, according to the rule of the candle, if you see, this is not a right. Okay, a red color candle cannot be here without a green color candle. This is called gap up, gap down. Okay, this candle was here, sorry, here the closing was here, directly it went here. The opening price was here, sorry, opening price was here. It kept a high point, it kept a low point, but body closing here. This is illegal according to me, but it's okay, no problem. We will observe many things in the market. Okay, just what we will try to do is trade according to the structure. If you see this in this structure, where you will mark your demand means Here if you see this in in this 1 2 3 move, you don't have a proper supply to take entry. Okay, but we will see further in this structure where we will get our proper market structure. Until we will wait, this is called waiting. When you wait, you will get your reward. See, this previous low was broken by this candle, and this has created a supply. When this high is created, this high is not invalidated. Here you can see, okay, this 1 2 3 has created a liquidity run over previous high and took some supply here. Okay, in higher time frame, if you see, you will easily get to know what it is. Okay, but in lower time frame, when you are validating like this complex structure, you have to keenly view everything what market structure is doing. Internally it did a 1 2 3, and then it broke into the downside, did a fake out here. This is not a change of character. Change of character, when you will say, when the previous low will be taken, then this is change of character. When change of character, sorry, to I didn't mark for you the change of character to happen for you. This was a high, this was the low. Let me mark here, this was a low, and then here one internal 1 2 3 low, lower high, lower low, high low, lower high, and then higher low, and then broken here. This is what we are waiting for. It was broken. Now this is our demand zone. This red color candle completely is our demand zone. Okay, whenever you are marking the demand zone, you have to mark along with the wick. Until this wick you have to mark. Okay, it's very simple to place it toolbox. Okay, this, take this rectangle box, place your cursor on this high point, on this low point, wherever you see. This complete zone will be a support zone for you. So initially when it came on this support zone, it showed a slight bullishness, and then it given the body closing here. When this thing did the market, the trend has shifted. Okay, sorry, there was no candle closing here. Candle closing was here, we'll see about it later. This was the demand zone. So this totally, this move, if you see structure within a structure, this is an impulsive move to the downside. 1 2 3, but in this one move we can see 1 2 3 like this liquidity and all form. This is called complex structure. So if you go into daily time frame, you can easily get rid of this complexness. Okay, I'll tell you later. Now currently I want to stick to this 1 hour time frame, and I'll show you how to take this trade. So here we have this sharp fall. After this we have this this supply zone. If I mark my supply zone here, market will not go anywhere. This is our high point. So to invalidate this, we have very simple. Whenever this high will be taken off, immediately whenever the body closing will happen above this high, you don't need to wait for your stop loss as well. In this gap you can see, whenever you place your position somewhere, when it body closes here, it becomes invalid for you to take the sell trade. Okay, then we will no longer, we will call it as a supply. Okay, let me change the color. If you see like this, here we got an entry, and then the movement to the downside. This is what beauty of structure. Structure will give us demand and supply when you mark perfectly. If you don't mark, see, you have here a high. This high, how nicely it respected, means there is no body closing here. Okay, then later what happened, we have a low here, and then a lower high, and then one more low here. Structure getting complex here. Okay, So if anybody will take entry in lower time frame there, they have a good earning here. If you see here, they would have entered here, putting their stop loss. Let me put here the stop loss. They have all this earning. So this is how supply and demand plays the role in the structure. I just wanted to let you know and mark and show in market structure, whatever the higher low forms, the previous red color candle zone until the wicks, if you mark, it will become a demand zone. To mark the supply, what we have done, when it's broken to the downside, this is an internal, let it be, but I want to show you how it forms. If any clean structure forms, we can see here, even in this internal structure, if you mark, this low was taken by this candle, right? This green color candle has kept the high. If you mark this zone again, here also you have a trade. When it will show here for you an engulfing pattern, bearish engulfing. See, basically chart pattern is nothing, but we have to see the price action. Okay, where the body closing is happening is very important. Yeah, there was a green color candle. After that, inside bar means inside this green color candle only there was a whole play. Then after breaking this candle, you can see the movement to the downside. Okay, this you should not mark it as a change of character. This is an internal 1 2 3. So when to know which 1 2 3, see, this will come with experience only. If you see the price movement, whenever 1 2 3 forms, there will be a good retracement will be there. That's what I wanted to say you. Sometimes price makes with a single move, sometimes it makes 1 2 3 to the downside. From here, when it took this supply, it broken this low very easily, but when it is coming down here, breaking this low, it was a lot of struggle is there, but here there was a clear passage for this. Okay, this is how structure within the structure is called internal structure. Will call, there will be liquidity everywhere below and above our structure. When will become liquidity, when we don't know, it is internal 1 2 3. This is what I wanted to tell you in this video. This is very simple. Market structure plays, all the high lows will become a supply and demand. If you see here, everywhere there will be a 1 2 3 move, right? If you don't know it is 1 2 3 and you will mark it as a change of character, always will become the liquidity. We have to keenly watch what it is doing. If it breaks here high, this doesn't mean this is an change of the trend, and you will mark it as a demand and you will take entry. If you take entry here, you will be a loser before the reversal comes. When real reversal will come, when the previous high is taken, this candle, there was an supporting demand that came to retest, it given you profit. Okay, thank you.